Welcome to the show. Great to have you with us. I'm Kim Parlee. The Dow Jones Industrial Average and the Nasdaq are at near record highs. Could we be nearing the end of a long bull run in stocks, or could it keep going? Joining me is Ian Butler. He's the Chief Investment Advisor at Motley Fool Canada. It is great to have you with us. Thanks for joining us.
It's great to be here. Thanks for having me.
Let's start with just briefly because people may not be familiar with Motley Fool, although I think it's pretty well known. But what is Motley Fool for people who don't know?
Sure. The Motley Fool was a company that was founded more than 20 years ago by two brothers in Alexandria, Virginia, which is a town just outside of Washington, D.C. Our mission is to help the world invest better. And to do this, we offer a collection of advisory services across 6 countries, 3 of which are available here in Canada. And these advisory services are really geared to the individual investor, helping them find great businesses and investing in them for the long term.
And also having some pretty irreverent writing, which I really like as well on the site. So that's good too.
We tend not to take ourselves too seriously.
Yes. Take the investment world seriously, not yourselves.
That's right.
So that's the key.
Yeah.
So let's talk a bit about the markets. And I mentioned that we're near all-time highs. I find it fascinating right now that we had the chair of the Fed come out and essentially say that she thought stock market prices were elevated. But again, that's a pretty forceful thing coming from the Fed. It reminded me of Alan Greenspan and the irrational exuberance days. Do you think U.S. markets are expensive right now?
I do. I think they're quite expensive. And you mentioned the Fed. They aren't the only ones that are saying this. Some fairly prominent investors have come out in recent weeks and indicated the same. And it's not just North America. I was in touch with our Australian advisor and our German advisor earlier this week, and they're saying the same thing. So it's really across the world that this is going on.
Are you expecting a sizable retreat to the market?
I mean, sure, but it's an easy thing to say because that's what markets do. They pull back, and usually that generates opportunities. That said, the hard part about that whole situation is gauging the timing and the magnitude of that pullback, and to which we have no idea. I think given though that risk exists, it's good to have some liquidity in a portfolio, and just be ready to sort of ride through it and buy stocks.
Why do you think, not to dwell on this, but why do you think we haven't seen a pullback? Because again, if you had gone back a few years and we had seen the, quite frankly, hysteria that we've seen in terms of politics and world affairs, I would have thought we've seen something a little more significant. We're seeing nothing.
Sure. Yeah, I think the key to that is that equities aren't the only thing that are fully valued, and I think this was something that was illustrated just last week. Amazon issued a bunch of debt to pay for its Whole Foods transaction, and the debt came at various maturities. The one that caught my eye, though, was the 40-year issue. And for one, personally, I wouldn't give a company money for 40 years. I wouldn't lend a company money for 40 years.
And Amazon,
especially, exactly. In the technology sector. I mean, Amazon didn't even exist 40 years ago. Who knows what's ahead?
Yeah.
So are you going to get paid back? Who knows? But that bond the market priced that bond at a 4.5% yield, which is just
rock bottom.
Rock bottom. So I don't think there are necessarily greener pastures for money to flow out of equities and into other areas. Yeah,
there's just nowhere to go. That search for yield everywhere right now in terms of where things are. So what are you telling members to do right now in this market?
Well, we try to ignore the market. It's hard to do. We consider ourselves bottom-up investors, but in our mind, great businesses exist, and if you have the right time frame in mind, the time to buy a great business tends to be today. That said, as I mentioned earlier, I think it's a good idea to always have some cash in your portfolio to take advantage of opportunities as they come through, and I think casting your net pretty wide across sectors is important. I think diversification today is more important than under different circumstances.
Yeah, and I think probably a lot more than it has been.
Sure.
I think that people are starting to look at things.
Yeah.
Where are you seeing opportunities right now? I know some small caps have been on your radar.
Indeed, I think if you were to look at some of our most recent recommendations, they have tended to be smaller companies. A lot of big companies are trading at pretty big multiples.
Yeah.
So we're finding more value and more opportunity in sort of companies that are flying under the radar or have been temporarily beaten down.
Let's take a look at some of those names. AGT is one that trades on the TSX. Not a name that I was familiar with. So Who are they?
AGT, it's based in Regina, and they own a vast network of assets that transport pulse crops. So a pulse crop is lentils, chickpeas, peas and beans. So their network moves these pulses from A to B, producing nations to consuming nations. The opportunity in AGT, though, is to is that they're building assets on top of this network that are going to boost the company's margins over the longer term. They've got a mill in North Dakota that they built, and sort of they're taking the raw material and turning it into something, and then they're able to sell that at a higher price. So I don't think the markets recognize this whatsoever.
Stock it down. I was just taking a look at the chart, down about 35% on the year.
Indeed,
So
and it's a company that doesn't show up very well on a quarter-by-quarter basis. The whole world of agriculture is so influenced by variables that are out of the company's control.
That are not quarter by quarter? Yeah.
Correct, yeah, exactly. So I think that's what's gone on. They've had a couple of quarters where they've been impacted by external events, but in our mind, that asset base that they've constructed and continue to build out holds significant value.
Second name here is PSD on the TSX.
Indeed, Pulse Seismic is the name of the company, Calgary-based. They own a collection of seismic data, which they sell to the energy industry. Exploration and production companies use this seismic data to define their resources. And given the slump that's occurred in the energy sector, results haven't been great for Pulse, along with every other energy company that you're going to come across.
So why do you like this one then?
I think they're completely under the radar. They have no debt. They're completely financially secure. Operating expenses are very low. So they're very much hunkered down, and we see very little downside and significant upside as sort of a need for their data comes back into the market, which will happen when energy prices sort of normalize. Okay.
Last one is VEEV on the NYSE. So yes. Who are these guys?
Viva Systems is the name of the company. It was a company that was founded by a fellow that came out of Salesforce.com. He continues to be a significant shareholder and the CEO of the company. And it's a company that's produced a suite of software that's used by life sciences company. Their original life sciences company, sorry. Their original product was a client relationship piece of software, very similar to what Salesforce does, but dedicated to the life sciences, sort of a niche market. And they've more recently come out with a product by the name of Viva Vault, which helps these life sciences companies, which include pharmaceutical companies, sort of get through sort of manage the regulatory process that they have to go through to bring a product to market. They're having tremendous success penetrating this market. They don't really have any competition, and it's a real growth story that we think is going to be worth a whole lot more money in 5 to 10 years.
All right, well, Ian, great to have you here. We'll have you back and see how these names are performing. Thanks so much.
Good stuff. Thank you.
Ian Butler, he's Chief Investment Advisor at Motley Fool Canada.